are live, Michael. How are you doing today?
I am awesome, Martin. How are you doing?
Doing great as well. Thank you very much.
It's good to be live, as usual. Let's welcome everybody to the show. Welcome back, everybody, to AGTP Daily. As you know, we go live every weekday at 11 a.m. Eastern Time in the United States of America to discuss the most important tech stories, tech events, tech happenings in the US of A. Today is Wednesday, the 24th of June, 2026. Let's get right to it. We want to talk about Micron and Sandisk. We want to talk about what happened in the market yesterday. They led a huge tech sell-off. And let's talk about why. Anthropic also launched something called Claude Tag. We want to talk about that too. And then later in the show, we'll be joined by Andrea Carcano, a co-founder and CPO at Nozomi Networks, to explore how OT, operational technology, IoT, and cyber physical security can help critical infrastructure businesses operate more safely and resiliently, just as industrial systems become way more connected. And following that, we will welcome Isaac Heller, founder, president, and chairman at Trullion, to discuss how AI-powered accounting automation helps businesses turn audit, compliance, and financial reporting from manual control exercises into faster, more trusted operating systems for decision-making. Martin, let's talk about Micron and Sandisk.
Let's do it.
Let's do it. And interestingly enough, this is something you really wanted to talk about a few days ago. You were like, did you see how much Sandisk has been rallying in the last, I don't know how long it was, but it's for a while.
Yep.
Not yet.
Yep.
Not yet. Let me give some details here.
Go.
So this sell-off that happened yesterday, it started in the memory and storage, right? And I want to run through like while this is happening, not just what happened. Okay. And in those two places, memory and storage, the market literally has been treating like these stocks, like the AI infrastructure demand is never going to go away. Like it's permanent. It's going to be there forever. And until everybody dies in the universe, like they're just going to need more memory and more, and more storage. Hence Sandisk and Micron, right? But all of these companies like Teradyne, Applied Materials, Marvell, Seagate, Qualcomm, all of them sold off sharply after Samsung and SK Hynix fell hard. And it turned like what it looked like was going to be like a sector thing into an entire, like anything that was related to AI stocks yesterday kind of had like a little bit of a gut check. They were like, what are we doing way up here? Now, as an example, I think it was a few days ago, you sent me a chart of Sandisk. And let's just do this. That stock was, I want to get to this. So Sandisk stock's performance has been extraordinary, as you noted to me. Okay. But there's some important stuff to note here. So Sandisk has not traded independently on its own for a while because it was separated from Western Digital. Those two were together. And it only began trading under SNDK on February 24th, 2025. That's a year ago. A year ago, Martin.
Okay.
But on its first regular trading day, it opened at 52.20.
Okay.
$52.20.
Okay.
The last time, like, I don't know if you look at it now, SNDK, let's just look. Let's just look, because I was looking at SpaceX.
I am showing the chart like for the audience right now.
Okay, you can see it. Yeah, but that's
yes.
But what is it doing today?
So today it's of $1,044.
Okay.
So it's up 700% since a year.
Yeah, but today it's down another percent.
Today it's down 0.3%, and that's yesterday.
And yesterday was down 13%.
Yeah, down from 1,230 to 1,078 exactly.
Right. Now the key here for me, Martin, is a few things, right? The idea here is that AI demand has not like just vaporized and disappeared.
Nope.
We know that for a fact. Like if this hadn't happened yesterday, we wouldn't even be having this conversation. But some days the market just wakes up and says, wait a second, what am I doing? And again, this can be for multiple reasons. We don't know, right, why. But you can imagine a situation where somebody on some trading desk, what was yesterday, Tuesday? Like literally 3 guys from a hedge fund could have gone out to dinner with each other and said, what is going on with Sandisk? It's only been public for a year and it's up 3,940%. What are we doing? I mean, they literally could have been sitting around a bottle of Pinot Noir and just saying, this is way too high. And the guy's like, yeah, but I'm not selling that thing. I'm not going to short it. This is the conversation that they have. You short that thing, you get run over. Okay, well, I'm just going to go buy a bunch of put options. right? You're leveraged, but it's just way cheaper. And if the stock keeps rallying, you don't lose any more money than the money you paid to buy the option, because all a put option gives you is the right to sell to somebody at a specific price, not the right for somebody to buy it from you. You didn't sell a call option to somebody. You're buying a put.
Okay.
Now, if those three, and I'm just making this up, right? But if those three guys all decided to do that, well, then to hedge that, what do they have to do? They have to sell some stock.
Mhm.
So you don't know what's happening until you really know what's going on in the derivatives market as well. But the point is that you can't just imagine that, like, okay, people are just buying and selling the stock in a vacuum. But the point is that at some point, people are just going to start to realize, hey, this thing may not go on forever.
Yeah.
But also, let's think about what the cascade effect could be. You know how we always talk about how Anthropic and OpenAI's revenues are just increasing. You know how, like, in February 2025 or whatever the date was, they were, analyzing $19 billion a year, and then by May was $30 billion a year.
Yes.
Now, both these companies want to go public, so they're going to have to very specifically tell you what their revenues are. But also, we know, because we're looking at it, SPSX, real-time stock price, it's up 1% today, but it's still down a ton from like 185, which is where it was trading 2 days ago. But this is for no other reason than this was the first stock to go public. This is the bellwether stock in the AI space. And the performance has not been good. And what we've learned in the 5 or 6 or 7 days that this thing has been trading is that it's not all buy.
Yes.
So what happens if the next time, or just prior to like the IPO, OpenAI or Anthropic goes, our revenues aren't growing as fast as we thought they were going to grow? What happens? The stock's going to
Same
get
thing.
killed.
Yep.
The
Same
stock's
thing.
going to get killed. But if their revenues aren't growing as fast as they thought they were going to, this is an if, right? If they report that, or if there's some understanding that that's what people think is going to happen, well, then what don't they need? They don't need as much compute as they thought they needed, which means they don't need as much connectivity to the data centers as they thought they needed, which means that the data centers aren't going to be able to sell don't need to buy as many chips as they wanted, which means that NVIDIA is going to go down. It means that AMD could go down. Well, if they don't need more data centers or bigger data centers, then what's going to happen to the storage? Because a data center fundamentally is just a big building with a lot of computers in it that have a lot of storage and a lot of compute. So if I don't need more data centers, then I don't need more disks. I know they're not disks, but SanDisk basically sells storage. But also, what's the communication mechanism for all this stuff? It's memory, right? So maybe I don't need more memory. And then it's just this massive cascading effect into all of these names, where it's not just like, I don't want to buy OpenAI anymore because the revenues aren't going to be good. It's like, wait a second, if that's the case, what are the second order and third order impacts? That was the conversation that people were having yesterday. That's what I think.
So I think here, first of all, I think the reason why I wanted to talk about Sandisk a couple of days ago, it's because if you remember, Michael, back in February or March, when we are talking a lot about the chips and the RAM, we were saying the next thing is going to be storage. Because that's like the three factor, right? Like you need RAM, you need CPU, you need GPU, and you need storage, right? And at that time, I hadn't checked the SanDisk stock, right? Like I had no idea.
Why did you look at SanDisk and not like any of the other storage companies?
So I think it was just completely random. I think I just fell on this one, right? I was like, okay, this is crazy, right? It's absolutely crazy. And I had not watched before, and I was like, okay, well, this is absolutely insane that in 1 year we grew 4,000% basically, right? And I was like, okay, it really shows that, okay, we talked a lot about the GPUs, we talked a lot about the CPU, the RAM, but storage as well is a hot topic, right? There is not only this RAM and CPU basically. So that's what I was like shocked by the growth. And now, even if it's down like 13% yesterday, like we can see on the chart that there is some up and down. You see that it's not like a straight line, right? But the trajectory is definitely upwards, right? And it's still up 28% this month, just in 1 month, 650% in 6 months. So in 1 year, 4,000%. I think the numbers is just insane compared to everything else, right? Like
what website is that you're looking at?
That's tradingview.com.
Tradingview.com. Do you subscribe to that or?
No.
It's free,
No. Yeah. So that's why I think that it's just absolutely insane to have this type of growth, and it's nowhere close the other one that we talked about. I think they are as of today the largest winner of the AI race by far. Like nobody grew 4,000% so far on the public market. I mean,
right, but just because that thing is up and to the right doesn't mean that it can't go down.
No, for sure.
Particularly because again, the stock market is a predictive mechanism, right? And the prediction that's getting made here is that it's going to be like unforeseen until now demand for memory, right? Sorry, for storage, for memory, and for compute. And that compute manifests itself in GPUs and CPUs. Right? The memory is, everybody knows what memory does, and the storage obviously stores the data. But as I was saying a couple of minutes ago, if one pillar just falls here, if one company says we don't need as much as we thought we needed of any of those things, the cascading effect could be scary. And that's what people were talking about last night. That's what I think.
I think that overall, because SpaceX IPO so high, Anthropic IPO will IPO so high, OpenAI will also IPO so high compared to their revenue and to their profits, right?
Well, profit zero, but yeah.
Like, don't you think like we need to be ready in the next 6 to 12 months to see a massive correction in the markets to just put everything back to normal, basically? But that's really driven by this massively overpriced free IPOs, right? Then like I would love to have your opinion on that as well. But I think on the infrastructure side, like talk about AWS, for example, the data centers, Sandisk, or even Nvidia, who create the infrastructure to run AI. I think it's gonna be more resilient than the model themselves because more people can buy them. Like all the Chinese or the Europeans, like they have no other choice than buying these chips or this storage. Like it's not like there is a million other possibilities. And so if AI as a thing just grow, the demand for the infrastructure is going to grow, which is not necessarily the case for OpenAI or Anthropic. Like the usage of AI can grow without them, basically.
Exactly, for sure.
So that's why I think like, do you think this type of stock can be more resilient, like Sandisk or Nvidia? No. Okay.
No, because the only reason why they traded up that much was because people thought, okay, this is an AI play.
Okay.
But if the AI play kind of goes away, then they're just... So you want to know what the perfect example of this is, Martin? Can you bring up another chart? Shopify?
Shopify. I think we can.
It's just shop, yeah, SHOP.
Here we are. Let's put
just
1 year.
Can you do like a 5-year chart or something? Like a longer term chart?
Yeah, we have 5 years.
Maybe even more. Just do 10 because I want to have COVID in there as well.
Okay.
So you can see that upward trajectory when people were predicting that everything was going to be e-commerce all the time, everywhere and all the time. Yeah.
Yeah.
But as soon as COVID ended, people were like, maybe I'll go shopping.
Yeah.
And it just went all the way down.
Yeah. Just after COVID, it was at the same price as just before COVID.
Just before COVID, right? So the idea was everybody just reevaluated and said, you know what, maybe it's not going to be all online all the time. Maybe Shopify is not going to grow into perpetuity.
Yes.
So what happens, and how long was that sell-off?
You mean from October, November 2021 to the lowest was October 2022, so 1 year.
Almost a year, right?
It's a
so imagine if people change their minds about AI and just go, you know what, it's not going to be all AI all the time into perpetuity. You could have a year of sell-off across the board.
Yeah.
Now, the thing is, the difference between Shopify and Sandisk and Micron and all these other companies is that there's no relationship between Shopify and any other e-commerce company. Right. So there's no cascade effect. They don't buy any more of this thing, that thing. You know what I mean? Like they're not buying any more chips or any more anything to run their business, whether it's on fire or not. Because again, they don't own their own data centers, right? But all these other companies need all these other peripheral connectivity. Otherwise, they don't work. And if they don't need it, well, then because SanDisk is not making better disks, or you know what I mean? They're not doing anything. They're not better at marketing than they were 2 years ago.
No.
The only thing is that everybody and their brother wanted to build an AI-enabled data center.
Yeah. Yeah, and plus you're right, like the tested effects would be terrible, right? Because all of a sudden, because you cannot just buy SanDisk, that's it. Like you cannot just buy storage, right?
No.
You need to also buy all the compute, you need to buy like the model, like there's a lot of things that you have to buy.
Because the disk on its own is useless.
Yes. The disk on its own is absolutely useless, right? So also like that's a company that just made what, Q4, 8 billion? Is that like what is this revenue estimate? It's probably per quarter, no? 8 billion per quarter?
I can't see it. It's just way too small on the screen. But and I don't have access. You subscribe to that, yeah?
No. It's trading the Michael. It's free.
It's free, but you have to sign up for it.
No. I'm not signed up.
Okay. Well, I tried to use it, but it wouldn't let me. Anyway, the point is that what SanDisk, you talk about their revenue, yeah?
Yeah. I think it's quarterly. It's not clear, but it must be quarterly. No. To report it.
No, their annual revenue is $7 to $8 billion. So that estimate is for today. I mean, for this year, probably.
Okay, but you said that the reported Q3 2026, they are 23 billion.
Today is, in fact, the 24th of June.
Yep. Yeah, so they are growing like crazy. They are growing like crazy in terms of revenue as well. So
yeah, of course, because everybody and their brother wants to have a data center, right?
Yep. So yeah. So do you feel we're gonna have like 6-12 months of?
So again, I'm not making a market prediction because it just depends what people think. But if here's the big risk, right? The big risk is that the market starts demanding returns from some of these companies, right? Because SpaceX, I just looked at it. Do you know what its PE ratio is?
It's the
price earnings ratio.
Yeah.
Price earnings ratio. So do you know what their price earnings ratio is?
It must be crazy.
It's a trick question. They don't have any earnings.
Yeah.
So there is no PE ratio. Right? Because if it's negative, they're not multiplying by like I. Do you know what I mean? Like, for those of you who don't know what I is, anyway.
Yep.
The point is that if the market starts demanding returns from companies like SpaceX, from OpenAI, from Anthropic, from all these companies that their revenue's growing, but their earnings are not there at all. And if they stop being able to raise money because the growth looks like it's going to be worse. What is that chart?
That's Micron.
Yeah.
This one.
But same thing, Martin. Remember, how long is that uptrade? What's the time between like that little area over there where it just started going parabolic?
So here
right there.
March 2026 until like yesterday, basically.
Right, but look at that. That's insanity. And you know why that is? That's because somebody in the market, some hedge fund was like, you know what? Micron's not trading high enough. And they just either they go out and they buy call options, or they sell put options, or they just go out and buy the stock. And they're like, this thing's going to have to be a rocket ship, because if AI continues growing in the way we expect it to grow, memory's going to have to get expensive. And we talked a lot in the first like 3 or 4 months of this show about the constraints in the chip sector, GPUs, CPUs, memory.
Which, by the way, we are going to talk about that our next story. But Claude right now, Anthropic has compute problem again right now. Like, they have plenty of problems, and so we didn't talk about that after, but it's real problems that the Frontier Labs still have as of today, right?
They do. Remember, they're predictive mechanisms. So your problem today is not necessarily your problem in the theoretical tomorrow, however you want to define tomorrow, right? But again, think about it. Did Micron or SanDisk come out with any new kind of amazing memory or unbelievably better drive? Not that you know of, right?
No,
You
not
think
you know of,
between March and I'm just pointing at the chart. You think between March and today they came out with something like Micron was like, okay, our memory now is like 8 billion times faster.
Yeah, exactly. Yeah, that justify our stock going like 3
Which is
times.
why stock going up like parabolic. Look at it.
Yeah, no, it's crazy.
That's not what happened.
Yeah, yeah.
So
yeah,
what
yeah.
did happen? What happened is somebody realized like, hey, this thing's not high enough yet. And they probably did a comparison between that and like SpaceX or that and some other stock that had already risen because of this AI impact. And then they realized, yeah, it hasn't gone up yet. And then other people like, okay, 3 months, that's stupid. I need to sell this thing now.
Yeah, no, it's an interesting time on the stock market right now. It's an interesting time. I think we're gonna see a lot of up and down, crazy up and down. I think until OpenAI and Anthropic and SpaceX find their price, basically. I think, right? It's like, but until then, it's gonna be. I think it's gonna be. But also, like, is there going to be like a risk on the Nasdaq, like on the indexes itself? Because if SpaceX, OpenAI, and Anthropic get into the Nasdaq, so which means like short term the value may go
they've
up.
already been denied.
Okay.
As of today, OpenAI and Anthropic have been denied access to the Nasdaq 100.
Okay.
But let's do something.
though.
Let's do something careful. Let's do something here though. What percentage of Nasdaq index is SPCX going to be? Because it's not in the index yet. Yeah.
Yes. It's going to be a pretty big percentage, no?
Expected hold an index weighting of between 0.95% and 1.5%.
Okay.
Once it's added to the Nasdaq 100.
Okay. So in case,
Now, can I just ask what I need to ask the AI one more question, right?
Yeah, go ahead.
Okay, so it says no specific stock is being permanently removed from the index.
Okay.
But all existing holdings will have their weights trimmed slightly on a pro rata basis to fund the required purchases.
Okay.
So there's nothing's being excluded from the index, which is interesting to me. I'll have to do more research on that. That just seems weird to me. But the point is, it's not that big.
They become the Nasdaq 101.
Sometimes they do.
Okay, sometimes they do.
Sometimes they do. Yeah, and like an index like the Topics has no specific number associated with it.
Okay, yeah, true.
Right, it can have 1,700 stocks in it, or it can have 1,600. Like that, it's just like whatever meets the criteria.
Okay, so in the end, as you said, SpaceX is not that big in relation to the Nasdaq. So even if it's lose like let's say half its value, then it's not going to impact the Nasdaq that much. Maybe at 0.5%, 1%.
No, but let's say this. Let's just say as an example that OpenAI and Anthropic were going to get in.
Yeah.
Now you're talking, instead of being 1%, now it's 3% of the index. But then, of course, is Sandisk included? Is Micron included? Because if SpaceX is getting killed, it's an AI stock.
Well. Yeah.
And NVIDIA and all these other stocks are going to get killed as well. And then the sum total of all those stocks are going to crush the market. That's the big worry here. And that's the potentially big problem, right?
Yeah. Yes. And so that's probably why they've been denied OpenAI and Anthropic to go into the index.
I don't think that's the only reason why. Frankly, the only reason why this is, again, I'm going to say something controversial, but the only reason why SpaceX is in is because Elon Musk is a trillionaire and well connected to the current administration, and he was just like, guys, you're going to put me in the index, right? Because otherwise I'm going to shadow ban you on Twitter.
Yes.
Do we know anybody that shadow banned on Twitter? We don't know anybody that's happened to.
He can do that now. He can just like pick people that he doesn't like and just
if he sees people he doesn't like, he's like, who's that guy?
No. And now he disappears from X.
And that guy is gone. But you understand the point, right?
Yes.
So the big risk here to me is the perception of the future value of the AI companies that we know today that are going to list going to be higher or lower in 6 months. And if it's going to be lower, then every stock that's associated with it could potentially be lower as well. And you saw that the down trade in Shopify took a year.
Yes.
Before everybody kind of shook themselves out. You know what I mean? Before like all the leaves fell off the tree and started growing again.
Yeah. Yeah.
I think we run the same risk here. And again, just so you can see what's going on here, Sandisk today also down like 7%. No.
Today 1.5.
Well, you're seeing a different price than I am.
2.75. Sorry.
Right now, sorry, I'm looking at a 5-day chart. Excuse me. Okay. I see 2.3% down today.
Yes. Yeah.
But still, and again, I don't have the chart up in front of me. Can you bring up like a 1-year chart?
1-year chart. Yes, here.
It's hard to tell because it's just been going up, so it's hard to tell where support is.
Maybe you're right. I mean, wait. I think we can draw a line where. Where is it? Sandisk, SNDJ. It's not gonna be easy.
Yeah, you don't have to draw a line, but excuse me.
Where is it on this platform? I remember we used to use that a lot. Yeah, something like that.
But again, it dropped below 1958. So it could go back down to like 1600.
Yeah.
You know what I mean? Around that area.
1600, you think?
I'm not saying it will, but I'm just saying like that's the next kind of point where it had some kind of uptrade from there. 1640, right?
Yes. Yep.
So if it goes down through that, though, what's the next support level? You can see all the way down to the left on your chart. No, just over here. I wish I could point, but yeah, you can see. In the 1300s, right? So
yeah.
Anyway, again, I don't want to make this like a stock trading podcast, but the point is that like if people's perceptions change about like where AI investment is going to go, well, then it could have a huge follow-on effect, a huge knock-on effect to the rest of the market.
And I think we gonna see it. Like I have some money on the Nasdaq. Like I'm like, okay, I'm just gonna wait a little bit before I buy more, because it's just going to be crazy in the next 6 to 12 months. And I think the fact that OpenAI and Anthropic want to IPO right now is the signal that even themselves, they believe that it's the moment to cash out, right? It's not like just us who say, hey, it's going to go down. No. I think it's themselves as well. They believe that they are at the peak right now and there is not much more they can do, basically, right?
Yeah.
And because they don't have the profits to support it, then the valuation really comes from the marketing and the roadshow that they are doing right now. And this is not the way it works, right? No. I mean, it is the way it works for the IPO, but then as you always say, the market is going to ask them for return, is going to ask them for some money and stuff like that. And they won't have much to show for it, right? And so this is the moment where we are going to go back to a normal price. And that can happen super fast.
So can I talk about the Nasdaq 100 just a little bit?
Okay.
It's a modified index, but it's a modified market cap weighted index, which means that companies with a bigger market cap have more impact on the movements in the stock market.
Okay.
So the top 7 companies are called the Magnificent Seven: NVIDIA, Apple, Microsoft, Amazon, Alphabet, Meta, and Broadcom. Are the top 7 companies in the Nasdaq.
Okay.
100, and they're all tech companies, and they're all related in some way, shape, and form to artificial intelligence. So it just means that like if the market has a turn, let me just ask the market one more question. Okay, this is going to scare you. You should sit down.
Tell me.
Okay. Is there anybody in the chat?
Yeah, we have some people in the chat.
Okay, so this is for the chat as well. And Martin, this is for you. Don't look it up.
Okay. I'm not.
And none of the wise guys in the chat should look it up either. But the top 7 largest companies in the Nasdaq 100, collectively known as the Magnificent Seven, account for what percentage of the entire index total weight, Martin?
What's the total value of the Nasdaq? Is it like 30 trillion? Did I get this
No,
number
I'm
right?
not talking about the number. I'm talking about the percentage weighting.
Yeah. But just to try to guess, like, is it a 30 trillion thing, the Nasdaq?
No idea.
I think it is. So let's say the Magnificent Seven on average they are 3 billion, slightly less than that on
3
average.
trillion.
Yeah, 3 trillion each. So that would bring us to 20. I would say 2/3. I would say 60%.
Close enough.
Close enough, okay.
45 to 50%.
Oh, 40 to 50%. Okay.
So just think about if those things go down.
It's yeah. If they all lose like 5, 10%.
Yeah, but that's my point. So like again, if Micron goes down, and then if it's a signal that Nvidia is going to go down, and then it's a signal, well, then if that goes down, then what's going to happen to? Do you know what I mean?
Yeah.
Then what's going to happen to the other companies in the index? Now you're starting to run into gigantic problems, right? Because like, what happens to Meta stock or it's like Google probably not such a big deal because it's not so AI weighted. But Microsoft, all these companies have probably had a run up though, because of AI. I mean, just type in Nvidia stock code.
Yeah, I just opened that. We feel the same way, Michael. So that's Nvidia.
But the point about this whole segment, right, Martin, is like, why did the market go down? That's the most important thing. And this is why, because I think there's been a sea change in the way people are thinking. And this is potentially, and SpaceX, I think, is having an impact on this. The real question is, what is the impact of the only bellwether SPCX on market sentiment? It's almost $50 down from its high. And it's bouncing around in the 150s. It's up 1% today. It was up like a little bit yesterday. But the point is that it's a bellwether stock. And because there's nothing else to measure it against. So what happens then if that thing keeps going down? Or doesn't rally? And then into that market, OpenAI, what if OpenAI or Anthropic cancels their IPO? It's a shite signal for the market, right? Because the market will be like, whoa, wait a second. They don't want to go public because why?
Whoa, if they cancel their IPO, imagine that.
But even if they can't, let's say they sell it at a much lower price than they were originally expected. Because remember, let's go back to this. If either one of those companies prices their IPO where it's $1 trillion or less, what happens to SpaceX? Then what happens to both of those companies when they list? And then what happens to all of these other ancillary companies as well?
Yeah.
Right.
Yeah, no, they can do that. So yeah, it looks like the situation is bad either way, right? Like either the IPO is super high, the investors are happy, they cash out, and then it go down badly, or the IPO below 1 trillion, which is closer to what they should be anyway, and then it sends a really bad signals to everybody that AI is actually not that big as of today.
It's a problem.
It's a problem. It is, but I mean, like, it's not a problem in terms of adoption, right? Like, it's just
no.
But
it's a problem because of valuation.
Yeah, it's that like the valuation are inflated, the price are way too high compared to where they should be, and this is also because of the AI companies themselves, right? Like they have played this game themselves for the investors, probably for themselves as well. They have like they are going to make a lot of money themselves, right? So
they are, but just remember the fact that when we first started talking about Anthropic, and they were like, we don't need to raise more than that $30 billion raise we did in February. We talked about this yesterday, the day before, and then huge investors and probably their existing investors said, we want to get the price up higher prior to the IPO, so the market prices the IPO at a place that's at $1 trillion, not at $385 billion. So their existing investors probably said to Dario, like, dude, what are you doing? Take this money, take it at a valuation of 965. I can't remember. It doesn't matter, right?
Then IPO, and we all make quick money.
Then IPO, and everybody makes money, and go back to running your AI company and just shut up. It was probably how that conversation happened. Like, I don't think that that's a farcical thing to say, because they came out and said they didn't want to raise the money, right? They didn't need the money.
Yep. So we're gonna see some scary time, I think. But at the end of the day, we have to protect ourselves with our investment on the stock market. But besides that, AI itself is just like, okay, it's just working. They do like a crazy thing on the stock market, and then it just go back to normal. That there isn't going to be like any risk on the product itself. I think that's at this point.
Well, can I jump in?
Yeah.
The whole story around, and again, we talked about this a little bit yesterday, but right, what's the biggest expense for OpenAI and Anthropic? It's the training.
Yeah, training compute,
right? But again, if they have to train, they have to have more compute. So those two things are completely related to each other, right? You can't separate them because they're not going to buy more compute if they don't need to do more training. You know what I mean? So it's 6 of one, half dozen of another. But part of the reason why they've been able to increase their compute and their training so much over the last 2 or 3 years is because they've just been able to raise an ungodly amount of money from the private markets.
Yeah, which help to subsidize the price of a token, which help to keep the price of the API of subscription low, basically. So that's impact us as a client.
Yeah, but more importantly, it also drove them to then invest in chips and in data centers and all the other things that drove the stock market higher. Because remember, OpenAI is not a public company, neither is Anthropic, right? So this drove the stock price of NVIDIA higher. Now, let's say they decide, okay, we're not going to go public, one, because the market environment is just shitty for them. But let's say, two, their revenues don't start increasing or start increasing less than they have been. We've already seen this manifest itself in Cursor, right? That's just a fact. You can go look at it. Their earnings were rocket ship, and then they just started drifting off a little bit. So then, what does that do to what does that do to their ability to raise because now if they can't get public money to fund the compute and the training, and the private markets were like, we need you to go public because we're going to stop giving you money. Well, then what's the impact on OpenAI or Anthropic from a model training perspective when you and I have already said and have already predicted in a way that the model companies are not going to be in the value chain, the place where most of the money gets made?
Yeah. Yep. No, it's true. It's true. They will need to adapt, right? Like they will need to adapt. They will need to change. It's super, super, super important for them. Michael, I love this conversation. I'd love to stay with you, but unfortunately, Andrea, our guest of today, just arrived, and I would hate to make him wait.
Don't make him wait.
So I think that was really, really interesting, and maybe we can continue this conversation tomorrow or Friday, because I think this is really good for people to understand what's going on from a stock market point of view, and then how it's going to impact.
So go do your stuff, and I'll talk a little bit more about this because I think it's important that people understand actually just how all this stuff works, right?
Exactly. Yeah. Okay, see you everyone. See you tomorrow. And yep, enjoy the rest of the episode with my girl and our guests.
Thank you, Martin.
Bye-bye.
Okay. But I want to make sure that everybody understands the point. It's not necessarily that AI is going to go away. It's just that once the private markets, right? So whether they're venture capital investors or even some of the sovereign wealth funds that have invested in both OpenAI and Anthropic, have decided that the valuation that the private markets can give them is high enough. And for both of these companies, for the two kind of bellwether private companies, not the public companies, OpenAI and Anthropic, excuse me, they were both around $1 trillion, which means that if they're going to IPO, they have to IPO at least with a valuation of $1 trillion, maybe higher. If the last people that put money in, if the final investors that did sort of the pre-IPO investment want to make any money, they're going to have a valuation that's higher than $1 trillion. And I would venture to guess that they would want that to be 1.25 to 1.5 trillion. So they can make a decent amount of money. Otherwise, what was the point of raising all that money? It wasn't just so they could buy more compute and more throughput and more data center stuff. But again, just to make a clear point about this, I'm not predicting that the stock market's going to get killed, but if you put all the data together that we just talked about, that the Magnificent Seven make up 45 to 50% of NASDAQ, and if there's a sea change in the way people think about the impact that artificial intelligence is going to have from an earnings perspective on these technology companies, the fact that there's going to be a sell-off should not be controversial, right? It just should not be controversial. So with that as the case, then you have to start asking yourself, well, what's going to happen to the individual stocks that we just talked about? And further, what's going to happen to the overall NASDAQ 100 and other indices that are related to that have the same components in there that are part of the NASDAQ 100. And don't forget at all about these knock-on effects or these cascading effects that we already spoke about, because that's where this thing gets really important. And remember, there was this great, I wish I had a copy of it actually somewhere. But I remember when I was at Morgan Stanley in the late 90s and it was the late 90s. And I was sitting on the trading desk there. And one of the traders there had a cartoon posted right just above his monitor. Okay, and it went something like this. I want to get this right. It was just a group of people trading manually with like tickets in their hand, a bunch of men with like neckties in black and white, but drawn. It was like a pencil drawing. And it was at the end of the day, and one of the guys was like, "Okay, everybody," and it was a crowd. It was meant to be like a crowded trading floor. And one of the guys was kind of walking off the trading floor. It looked like that's the way it was drawn. And he was like, "Okay, everybody, goodbye." And everyone looked, and somebody said, "Buy?" Did he say buy? And then everyone in the crowd started screaming, "Buy, buy, 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 buy," in the stock. Obviously, the point was that just some random person saying goodbye, anybody heard was buy. And then the market went crazy. This is, again, it's just kind of making fun of Wall Street. And then in the next panel of this cartoon, somebody said, "Hey, the name of some stock is going to excel." And all somebody heard was sell. And then it was just like sell, 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 sell. But the point of this cartoon, and the only reason why I'm mentioning this is because the sentiment really matters. And once the sentiment changes, it can have a knock-on effect that's not just fast, but super fast. And as we talked about in the Shopify example, you can see that it started going down really quickly, but just to get all the kind of lead out of the market, it took about a year for that stock to normalize, and it normalized way back down at the price that it was trading before COVID. So it did this huge run up during COVID where everybody was talking about how it was going to be all e-commerce all the time. And at the end of the day, that's never going to happen. Remember, the extremes are extreme. And look, I've seen stuff trade well through extremes. eBay was one of my favorite examples of this, like back in the early 2000s. I knew guys that shorted eBay when there were no earnings there, and the stock just like kept going higher, and they just got carried out on a stretcher. But the point is that if the market sentiment here changes across the board for all of these AI-related stocks, the market's going to run into like a problem. And it's just something you should pay attention to. Pay attention to the Magnificent Seven and the NASDAQ 100, but also pay attention to some of the other stocks. And frankly, you can get a signal from overseas markets. You can watch SK Hynix and you can watch Samsung, which is heavily weighted towards their memory and stuff like that. So it's just something to be careful of and something to pay attention to. And again, I'm not recommending either you buy or sell the stock market, but the impact on the sentiment of the overall sector is also going to get driven by the valuations inside these companies. And that is something I think that everybody needs to pay attention to. Does that make sense to everybody? Does anybody have any questions about that as well? Because I'm super happy to answer questions about this. But I want to cover that a little bit more if that's okay with everybody as well. It looks like there's a party going on there. Give me 1 second. Yeah, so Martin and I were talking about this a little bit before Martin went to go sort of help our guests come on the show. But the question we were asking back then was, what is the broader risk for the AI stocks? And the risk here, as I was saying before Martin had to jump, is that the market starts demanding visible returns on AI capex sooner than the industry can deliver them. This is the big problem, right? And there is data out there that shows that AI investment and adoption are huge, but public market investors are now asking how much of that spending turns into durable earnings, right? Because that's where things start to get really important. And remember, the AI trade itself has spread from software and GPUs into memory, storage, power as well. Everybody may not know this, but like SoftBank committed to spend $30 billion to build power for AI data centers. And we spoke yesterday about Chevron working with Microsoft to create power for one of Microsoft's big data centers in Texas. So all these things are connected. right? Whether it's power and even private company IPO expectations, which we were just talking about as it relates to OpenAI and to Anthropic. And frankly, I would watch both of those companies actually really closely as well. Pay really close attention to whether they're actually going to keep doing their IPOs or not. Because if they don't, it's a massive signal for the entire market. Now, again, Martin and I were just talking about this. It's not the case that artificial intelligence is fake or that it's some kind of scam. It's not. It's clearly real. And we're believers in the fact that it's going to have an economic impact on companies both large and small. And if it does, then it's going to have economic impact on the economies of all the countries that use this. Oh, no. I mean, all the companies that use AI. Okay. Well, it looks like we have Andrea. Do I have that right?
Yes, you said it perfectly.
How are you? All that means is I've met an Italian man before. So just give me... How are you, by the way?
How are you?
I am doing super duper. Thank you so much for joining us. Look, we wanted to have you on the show because we wanted to talk about how OT, IoT, and cyber physical security. We spent a lot of time, if you follow the show, talking about cybersecurity recently. So I think this is actually really interesting for us, how it's going to help critical infrastructure businesses operate more safely and resiliently, particularly as industrial systems become more connected. And before we jump into the details here, maybe you want to tell us a little bit about how Nozomi Networks works, what it does.
No, thank you. Thank you so much for the question. So first of all, on top of telling you what Nozomi Network does, let me tell you also a little bit of my experience, because I think it's relevant for the question.
Go for it.
So I actually spent my entire life working on cybersecurity.
Wow.
And when I did a PhD, and actually my PhD was focused on building malware and viruses attacking industrial control system. So
okay.
That was before was a cool topic. It was more a research topic. It was before Stuxnet, before 2009, but that's how everything started.
Got it.
And I started on the defensive side, working with the government, I moved on the defensive side during the PhD, worked in the industry for a while, and then founded Nozomi Networks. And basically, Nozomi Networks is a company that is funded with the idea that standard IT cybersecurity technology cannot do a great job in protecting industrial control systems, but you need to have a dedicated approach in protecting those type of infrastructures. And Nozomi, combining cyber expertise and AI, actually is automatically building a tailored security profile protecting industrial control systems.
So without going into your entire PhD, which must have, and I'm saying this completely unironically, actually, must have been fascinating to do this. Where does the insufficiency lie in the existing systems to protect infrastructure from cybersecurity risks? And then maybe the follow-on question to that is, what type of cyber experience combined with artificial intelligence is out there to disintermediate that problem?
Yeah, it's a good question. So first of all, let's start from the fact that there is a basic difference from when you are looking at a classical IT network or an industrial control network, and the first difference is that that network need to operate 24/7.
Yep.
You cannot manage a false positive from the cybersecurity perspective. You cannot intervene on something that is working well. That's the first aspect. The second aspect, the majority of those networks has been designed to work and operate in a closed environment.
Yeah.
If you look at a standard power plant 20 years ago, there was people working 24/7, going on site every day, monitoring everything from one control unit inside the plant and so on. Obviously, the modernization of the infrastructures and the need of the business, for the right reason, because I think we drive a lot of efficiency. Now everything is connected. You can receive data in real time, but those systems were not being, no one designed those systems at the very beginning, keeping in mind that one day those systems were reachable or connected to the real world. And today is a fact. Beside the tentative to keep those systems separate, there is always a connection between those systems and the real world somehow. So
go ahead.
No, I was just concluding by saying, if you combine these two aspects, it can be, it become very easy to see how, performing an attack to those type of infrastructures, it's on one side easier, and on the other hand is, it's also can be also very dangerous.
Yeah. So I was going to say, in a world, and I'm just going to simplify this to make a point, right? But in a world where there's one power plant, having it connected to anything doesn't really mean anything, right? Because there's no benefit to it. But in a world where there are, let's say, 2 power plants, well, now if there's energy sharing or power sharing or anything, now that connectivity, and that's not the only reason why, can have multiple benefits for that as well, for tons of different reasons. But now you introduce the fact that once you're connected to the outside world, you're right. Now you have, because it's no longer a closed environment, now you run the risk of somebody figuring out a way to break into that environment and do things that are nefarious. But now that we understand that, where does artificial intelligence, because you mentioned that as well, where does AI come into play on the defensive side of this? And maybe you can even talk about it on the offensive side as well. What is going on in this sort of arms race between people that want to use AI to scale their attacks on physical infrastructure and critical physical infrastructure, and then that infrastructure itself providing itself with protection?
Yeah, so it's a very interesting time. But being a former hacker, I can tell you, it's very different to write a malware today and write a malware and what it was compared to write a malware 20 years ago.
Sure.
Completely different. It's easier. You can write much more complex attacks and malware with less knowledge. And that gap is never been that big.
No.
So you don't need a deep knowledge. And that is the main, that is one of the first main change that AI is introducing. Mm-hmm. Obviously, on favor on attackers at the beginning. Obviously, that capability that AI is bringing can be used also on the good side. But right now we're facing a gap that today discovering a 0-day, so discovering a vulnerability which is unknown and not patched yet is becoming much more easier with AI. And we use inside Nozomi, we always use the AI to discover 0-day in order to build intelligence inside the product, right, to help the people to be better protected. But in order to do that, you need to add a certain type of skills. Today, those skills are very little that you need to have, and you're able to identify a lot of vulnerabilities with the instruments that there are out there. So
how significant are the vulnerabilities actually on the physical infrastructure, meaning on an IoT device or an OT device, in the sense that when they were originally designed, they weren't designed to create a protective surface for, in this case, let's say like a power plant, right? So yeah, what has to change in those devices themselves, if anything, to then make them available so that artificial intelligence or whatever the most modern cybersecurity protections can be available for them, if that makes sense?
Yeah, it makes sense. That is a great question. So who is building those type of device? I'd say nowadays, as we're speaking today, it's embedded from every producer that the way they were building those devices, 20 years ago need to be changed, and they are changing it. But the real dilemma they were facing is basically the timing. Those infrastructure need to operate 24/7. You don't have the luxury to sometimes update a firmware. In some cases, completely change the components. You need to wait. But with the AI coming available for both sides, there is a gigantic difference. An attacker has the luxury to actually use the AI and becoming up to, getting up to speed in days. One of those infrastructure can be a power plant, can be an oil and gas, can be a pharmaceutical plant, or even a manufacturing company building cars. You have business commitment. You need to continue your operations. You don't have the luxury to say, okay, wait a second. Now the AI has new capabilities. There is new 100 vulnerability out there. Let me stop 1 second, for 3 months, my production for 1 day, for a few hours. It depends on what you want to do, but you don't have that luxury. There is an unbalanced difference between the attacker and the defender because of their mission is very different.
Yeah, I mean, the missions are completely asymmetrical, right? Because you're right. The attackers can do whenever they want. If they have downtime, it's just downtime. It doesn't really matter to them. But like if an automobile plant or a pharma or an oil and gas thing goes down, it's a problem, and it could be a big problem, and it's a cascading problem as well, right? Because we talk about this all the time. That oil and gas company or that pharma company or that auto plant or like you said, or a power plant, they all have insurance as well. And the whole the mathematics around that insurance changes dramatically. And I'm going to use a couple of metaphors here, but instead of having just like one window where somebody can get in a closed environment, now that you have all these IoT devices connected to everything, connected to the world, now you have 1,000 potential entry points or more. The whole calculation changes. Do we have examples, at least recent examples, let's say in the last 6 months or a year, where the implementation of agentic AI has allowed somebody, again, because of the power of these large language models, but just artificial intelligence in and of itself, right? To understand where those vulnerabilities are and to smoke them out in a way that would not have been possible a year ago or 2 years ago. Do we have examples of where that stuff now is actually having a visible impact on whether it's an oil gas company, an auto plant, or some other, or a power plant, that we've seen this actually happen and there has been some downtime that was not expected?
So what we're observing, obviously there is a certain confidentiality that we need to maintain here, but what we're observing with, from the Nozomi perspective, now with almost 2,000 customers all over the world on the critical infrastructure landscape, let's say, is that we are observing an increasing amount of attacks, in particular in some sectors. So one of the most attacked sectors, and that is it's also published in one of our annual threat, intelligence report that we published, is the manufacturing world in general. Clearly, also one thing that we do is observing, and try to stay as close as possible to, let's say the hacking community as much as we can, because obviously we need to acquire intelligence for helping our customer in every possible way. And one thing that is now a realization for all the hacking community that are not building attacks. I'm not talking about nation state attack, which is a completely different category. Now I'm talking about criminal groups that they want to make money out of those attacks, and they clearly realize that you have a higher chance to make money if you perform an attack on a manufacturing plant than if you perform an attack on a bank or on a financial institution.
Oh, really?
We always have to associate that, if you attack a credit card or a credit card company on a financial company, then you have higher possibility to make money. But that's not true. And now it's been realized also by hackers. If you attack a manufacturing facility and you find a way to block that facility, that company will spend as much money as they can to get back their systems, because their business is dependent to that facility.
Right.
And that's been realized. Now, where the AI is kicking in, the capability for identify a 0-day, the number of identified 0-day vulnerabilities being published by the US ICS CERT in the last 6 months is growing faster than we ever seen in the past.
Wow.
The reason why it's growing faster is because the capability that today everyone has, even people that are not sophisticated hackers,
right,
they're available for everyone.
Yeah, I mean, there's been a huge democratization of the ability to be an offensive hacker, even for people, as you say, that are not like their expertise is not necessarily out there. Gives people that don't have the skills for a bunch of different things actually to acquire those skills in a way that wasn't possible before. What is the impact on industries like logistics and shipping? Do you know what I mean? Where those things are in movement, right? Like imagine an oil tanker or a series of oil tankers or a series of shipments that are coming from China or Indonesia or wherever, ending up at the port of LA or the port of Boston or the port of Philadelphia. But if those ships also have systems that are connected to things, What does that look like to you as well?
Yeah, we are protecting different customers working on logistics and port and so on.
Right.
So first of all, the good news is that we didn't see a disruptive attacks, at least it's not available in the public knowledge, and we didn't see also from the Nozomi perspective a dramatic public attack performed against this type of infrastructure. That is the good news. But as you mentioned, the risk of an attack performed against that type of infrastructure can be disruptive. It's not only for the facility itself, but for the events that will generate, delay that will propagate over different industries and over different countries. So potentially can be a devastating effect. Good news is that we see a lot of customer in that business, in that vertical, investing and spending, try to spend money on, for protecting those infrastructure. On the other hand, we're going back to the fact that right now the war is asymmetric. The offensive side is more equipped than defensive side.
Can I ask you this too? I'm just trying to think about the way companies are structured, or whether it's a manufacturing company, as you said, or a pharma company, or an auto, like whatever it is. But a lot of the responsibilities end up being siloed. Like I understand there's a CISO there that kind of oversees everything.
Yeah, correct.
But there is the potential that some business that's buying IoT devices or OT device or whatever it is being managed separately from another area that's doing something similar, but in a different part of the business, in a different vertical. How hard is it to then, because one of them can be really focused on the cybersecurity part of this thing, and the other business may not be, even if the CISO is trying to organize all of this stuff. What is it like trying to help these companies get that stuff organized internally? And then we can talk about external partnerships, which I think are going to be really important as well. Do you know what I mean?
Yeah, very, very good question. You nailed it in the sense that, I've been in this business for 15 years. That's almost, I founded the company almost 15 years ago. And I see an evolution. I observed an evolution of organization inside those companies. And while the trend is centralize the responsibility on the CISO, so the responsibility of protecting, the critical infrastructure is a trend. I think the majority of the company are selecting the CISO as the ultimate responsible for protecting, all the technology components around the plants, whatever the plants does.
Yep.
The reality is that, as you mentioned, is a transition. It is not always the case because on one side you have the plant manager that has the responsibility to produce the business, to run the power plant, to run the manufacturing plant, and on the other side now you have the CISO that has the responsibility to protect the plant. And obviously those two teams, they need to work together, and they need to understand the priorities they both has, and it's not always easy. So it's not uncommon for us to try to help, making sure that the communication is strong, but making sure that Nozomi as a tool can help them to navigate some of those challenges.
It's interesting the way that works for you, right? It's like part of your job is helping them organize internally, which at some level makes a certain amount of sense. Can I ask you this too? And then maybe I'll let you go. You mentioned earlier, and I think it would be surprising for the audience actually that's listening, but you mentioned earlier that the risks for non-financial companies maybe are higher than they are for financial companies, right? So because you're right, a manufacturing company, if their plant is shut down or if a power plant is shut down, like they need to fix that immediately, like right away, right? But I think that may be surprising to people. Do you think that those non-financial companies, right, are aware as much? Because I feel like the companies that have all the money, that are in the money business, are just like scared every moment of every day of being hacked, right? Because all the money's there. But do you think that these manufacturing companies or the pharma companies or the other companies you suggest are even more at risk, that they understand what those risks are as well as the financial services companies, or no?
The gap is there. You said it. There is on the financial verticals, the level of sophistication and the level of cybersecurity that has been implemented is not even comparable to many of the vertical that we just mentioned, from manufacturing going on. So the gap is there, and it's obvious. The good news is that while is not the case, unfortunately, for every organization. But the good news is that in the last 3-4 years, we see the problem moving from being a technical issue to becoming a board discussed problem for all those organizations. Yeah. I'm sure there is one that has been left behind. I'm sure there is a middle company that they don't have time and effort and capabilities to really look at that as a problem that is coming. But the good news is that the biggest organization out there in all those verticals that we mentioned today are talking about the problem at the board level. And that's, I think, it's a good news.
Okay. Andrea, I'm going to leave you with that. I really appreciate you coming and doing this today. Thank you so much for taking the time to join the show. Really, really great conversation. Thank you again for doing this today, man.
It's been a pleasure. Thank you for inviting me, and have a good day.
Bye for now.
Bye.
Okay, Martin, let's bring in Isaac as well. Isaac, are you with me? How are you doing today? You seem a little tired, man. Are you okay? Okay, let's get you into the main part of the show. Give us 1 second. There you are. Okay. Isaac Heller, founder, president, and chairman at, how do I pronounce this? Trullion?
Trullion. Yep.
I got it. Like Julian. Okay, I got it.
Whew. Like Trullion, like Julian. It could be like Trillion with a U. It could be like Boolean.
Boolean,
right?
I like it. Yep, I got it. Trullion.
Boolean. It means truth in millions, right? What good is calling something a million or a billion or a unicorn unless it's backed by truth?
Exactly. Can we stop the unicorn thing? Like, can you and I begin this idea that it's only a unicorn if it's not really real and there's only one of them? Do you know what I mean? Anyway, it's a little pet peeve of mine.
Give it back to the kids.
Let's
give it back to the girls, the lovely grade school girls. They will appreciate it much more.
I'm with you on this. Okay, look, we wanted to have you on because we wanted to talk about how AI-powered accounting automation helps businesses turn everything that's using their accounting, like the audit, the compliance, and financial reporting, from just a manual control exercise. And you should understand that I started my career at Morgan Stanley in the controllers department into more of a trusted operating system for decision making. So thank you for that. And maybe you can tell us, before we jump into the questions here, about the important work that Trullion does.
Yeah, definitely. So Trullion is AI-powered accounting automation, not the little accounting like QuickBooks and ERPs and bookkeeping. It's the big stuff, right? Yeah. So corporate accounting and corporate audit, the big companies that require accurate, reliable accounting, and the major auditors who rely on that language to transact and provide assurances. So we help automate that. Uniquely, we can take any type of unstructured data, such as documents or contracts, ingest them, and then we can create ledger entries from that using both artificial intelligence and AI. Now, we can also do the opposite. We can also take ledger data, trace it back or validate it or test it against source data. So Trullion is a platform. We have two logical users. One is the corporations who are trying to get to the ledger, and the other is the auditors who are trying to get from the ledger back to truth.
Interesting. How complex is this, right? Because again, you said kind of off the cuff a little bit, I'm not talking about QuickBooks. I'm talking about real high level accounting here. This sounds like it's way more complicated than most people could understand. Yeah.
Yeah, it's complex. Now, I will tell you that both types of accounting are complex challenges, right? In bookkeeping, mass automation for personal and small, medium-sized business. The reason ours is complex, in addition to to be highly accurate, right? There's no tolerance for inaccuracy because these are folks that are taking a high professional liability. These are companies that are publicly traded. Some of the data that's flowing through our system are the most expensive line items, such as revenue or leases or assets, and it's got to be right.
So you've just opened up a couple of really interesting questions for me here. Everything is complex. Like on day one, whenever you pick day one, it's already complex. But over time, it gets more, particularly as the businesses grow, they become more and more complex. And once you're right, they start adding lease accounting into this, or revenue recognition, all this other stuff. Things get really, really complicated. But there's a gap now between the tools that finance are using and the way they're expected to operate today. Plus, because it has to be highly accurate. Like in a way, it can't be inaccurate at all. I mean, I can tell you stories again. This is from 30 years ago when I was in the controls department and I was working with like the high yield bond desk. If I was off by like a dot, I was off. And I was getting yelled at like on a regular basis for this. But the point is that like, how do you get people to adopt a new tool when the tool or the whatever system they're using right away is already as accurate as they want it to be, but it's not as efficient as they want it to be? Do you know what I mean?
Yeah, well, first of all, it's the million or billion dollar question these days.
$1 trillion. Can we call it a $1 trillion question?
It's the $1 trillion question. Okay, and how do they do it? Okay, so first of all, let's think about what you're competing against. We are competing against Excel.
Yep.
Or maybe like an SAP or Oracle add-on.
Yep.
Right? That's what we're competing against. Those are stodgy databases, but they're right. And they're right. And when the cell says, 1, 2, 3, it's 1, 2, 3.
Yep.
Okay. So it's very hard to get those people off something that's more accurate. So for example, we can ingest the document, plus we can show them that nice little spreadsheet. So now they have the spreadsheet view in Trullion and the document. Well, accountants are they're skeptical, but if they see tech they like, they will jump in, right? These are highly technical, tech savvy folks, believe it or not. Okay.
Oh, I believe it.
So that's one. So you have to show them a higher version or a stronger version of the truth. Then something happened in the past 2 years that's accelerated our growth.
Go ahead.
They started using large language models. And they started, large language models, they've been around since ChatGPT kind of made its debut.
Yep.
But for accountants, they were more of a party trick because they knew they smell hallucination much faster than you and I. Sure. And it was only in the past 6 months, I would say, that the models really started getting better, and you started to see really what you would call skeptical accountants moving over to and trying these. So they started getting more comfortable with a prompt-based interface, which is one of the key switching challenges of the agentic era. Yep. Now, that really helped us because what they found is they started to get more comfortable, but as they got more comfortable, they saw the limitations of large language models when it comes to core accounting and audit tasks and the high bar of accuracy. Yep. So they actually came back faster to Trullion because we have both the auditable application that does the actual work, plus we have the access to the agent on top. So if you got your AI and you've got your traceability, that's the winning combination in the next decade.
So are you suggesting that they heard all the hype around LLMs and they were like, hey, maybe we can use this stuff? But again, and I feel like I'm repeating myself on this so many times, but because those models are probabilistic as opposed to deterministic, they were coming up with hallucinations, which you're right. An accountant should be able to see from 10 miles away. Because their whole job's about accuracy. Sorry, I interrupted you. Go ahead.
No, that's right. Look, I think, hallucinations are, I would say, they're getting patched up more like a leaky bucket, right?
Yeah.
But if it's going from 3% hallucination to 2% or 1%, it's got to go to like 0.1%
Yeah.
or maybe less.
Or less, yeah.
That's one. The second, large language models, they're stateless. So outside of a context window, every conversation is new, and
Right.
they're doing web search and web script. So they're
Yep.
recreating the train of thought. Now, in accounting, source data is very important. Being able to drill down to a document or a financial statement is critical to the comfort and the audit. And so one of the things that Trullion does is we store the truth, right? We store the source data. I mean, we have FASB and IFRS
Yep.
accessible within our knowledge base, where it's not just like you're searching it like you would an LLM. You can actually anchor it in section 18.1 that's related to, derivatives.
I love this. Yeah, go ahead.
And that's it. And so I think, look, kind of to your question, you were saying like, as people kind of are in finance or kind of moving up the curve and figuring out how to scale, I do think there's a generation of finance or accounting folks, I would say, a little bit earlier in their career, who are very, very AI pilled, and they're trying to push up the curve as much as they can with AI, and they will be fine. But your person who's been around 10 years, 20 years, 30 years understands that risk is not uncovered in a day or a week or a close cycle even. It is uncovered in a year of financials or in a mistake that was made 2 years ago that could have been caught when you're going into a transaction or audit. So I think that more experienced accountants look at risk a different way, and they're more guarding against the big things than trying to go fast on the little things.
Right. And somewhere in between is probably the right place to be, I would guess. And look, I remember when I used to do monthly closings, quarterly closings, half year closings, and then year end was a nightmare, right? Because this is where everything kind of fell out.
And you actually might have more. I'm totally with you that like, there's a lot of, it's kind of like a hybrid approach. Like closing the books, AI may be a really good case because you're not changing data. You're just trying to tie and reconcile. And so that's about speed. Performing a revenue recognition work paper analysis on a multi-million-dollar contract is probably where you want that anchored in the work you did, and maybe have a second person review your work. Right. So there's a different approach for different areas.
Is there, so one of the things one thought that I've had over the past few months is that these large language models are not the end state for what artificial intelligence is going to be able to do. And interrupt me when you feel like I'm saying crazy things. But is there a place now that people understand what properly trained AI models, and I'm not using LLMs here only, can do? Is there a place to build a model that's trained, I wrote this down, on FASB and IFRS only, that really understands that maintains context, that understands what your finance team is trying to accomplish, that eliminates because the LLMs are built probabilistically because it's a math problem as opposed to a deterministic problem. Is there a way to build a model that understands this stuff in a way that's completely deterministic and eliminates the hallucinations completely? Because it's not an LLM itself, it's a different type of AI model.
Right. Okay. In theory, there should be, right? So you have to theorize that if a large language model continues to self-improve,
right,
that it will be able to be a digital accountant at the level of the highest accountant, right? You would think that. And I think for the most part, time will tell, and we're really just on a track, and we have to understand how long it'll take and what are the expertise. So then you just have to look at the fundamental limitations of LLMs architecturally.
Right.
Again, LLMs are, like you said, probabilistic. They're black box in nature, and they're stateless. They're not putting you in a state in terms of a database. And I think that so much of complex accounting is being able to take that checkpoint and make sure that whatever that record is, or that spreadsheet, or that document is good at that moment in that cycle. And the next time you reference it, it needs to be that exact thing. And so I think that what you'll see is Application workflows will be very valuable in accounting, like they've always been, because they contain auditable data.
Right.
LLMs will be highly penetrated in terms of moving you, the accountant, from one, piece of the workflow to another, or perhaps being able to query all the data that you have assembled in a database or an application.
How ready are some of these big companies to be able to implement systems like the ones that are getting built around agentic AI, particularly in the finance space and the accounting space, as it relates to their data and the context of their data? Because I can imagine situations, particularly when I was still working at Morgan Stanley or Goldman Sachs in particular, where a lot of the data was fragmented, like the data that I needed and the data that somebody else needed was different. But at scale, you want to have all that stuff consolidated. Like, how ready are they actually to do this stuff at scale?
Right. Well, first of all, like, more ready than any enterprise company has been for a new technology, meaning like we just have to pause for a moment
Go ahead.
and realize that, like, just recognize that LLMs have proliferated and penetrated big enterprises, like from Morgan Stanley to ExxonMobil, faster than any new technology. Boardroom down, brand down, Anthropic, OpenAI, you better try it. Even the most conservative groups like finance and legal and stuff like that. So that's the first thing. Everyone's trying it, everyone's doing it, everyone's adopting it. I do think that in accounting specifically, to do the heavy corporate accounting and financial services stuff,
Yeah.
the LLMs are not there to completely like outsource it to the black box. So you're looking at LLMs to stitch together disparate databases. I think that was your point,
Yeah.
and bringing them into one place. And then you actually hit a practical limitation, which is that LLMs are only as good as the underlying data, right? So why are they so good is because they downloaded Wikipedia and read it before we woke up. No, I'm saying like they're like fed very well, and mechanically they can ingest that data. But like, how do you sit on top of a Morgan Stanley bond system, right? It's not like you can matter what that system actually has to either be like textual data, which is what these sites, or it has to be enabled with agent protocol. MCP is one of the popular ones, but it has to be like a readable system. And so how ready are they? Well, their systems aren't readable. So they're a little bit locked out from like full end-to-end orchestration across a big business.
So yeah, so that was going to be my other question, but you've kind of answered it already. That idea that like the legacy systems that they have already may not even be useful in the context of agentic AI, which can actually give them real productivity gains. So I was curious, like, what else needs to change internally for that to happen? Because again, it's it's a big investment to say the existing systems we have aren't capable of handling the throughput that, and maybe they can't even be used with MCP or other protocols like that to be able to handle the agentic side of this. Yeah.
Yeah, I mean, I think governance is the big one, right? I know, but it's funny, like everyone says governance, and I think that's like a sales pitch for a consultant. But when it comes to agents, it's very, very true. And so what that means is, even if let's say you're like a CIO and you were able to deploy an agent workflow in an organization that, I don't know, took documents from one area, scanned them and gave the data to an accountant, and then the accountant reviewed them and it put it in a different system, and then that system put it into another. Like, even if you had all that, the challenge, put aside governance, meaning, two issues in governance. One is like that agent, if you're letting it cook, as the kids say, like it can cook, like it can go into other documents, it could go do other things. Like, what's to stop it, right? That's one. And then the second, which is more important, is, because I think that first part gets figured out a little easier. The second part is like, how do you create consistency, right? How do you make sure that it does the same thing every single time, right? And that every time you release a new system or a new version of the agent, it doesn't degrade. And that's where you get into, this is like software engineering, things like what you hear like evals and benchmarks and stuff like that. That's the whole challenge of the agentic era. It's not a database where you put it in. It's like a, I don't know, a meandering organism that needs to be like have the same exact guardrails, and little hamster tube every single time.
Yeah. But how do you create that consistency, right? And is there enough, what's the right word? I want to get this right. Are the walls wide enough so that, because on day one, when you first implement or first deploy agentic AI, it's probably not going to work the way you wanted to, as you were suggesting, right? But you have to have the sort of mindset of we're gonna get the walls like thinner and thinner and thinner so that we can actually make sure that it's doing the thing that we want it to do and not doing anything else. But at the beginning, you have to understand that it could be bouncing off some pretty big parameters, right? What is the attitude or the I can't think of this word in English. Sorry. What is the likelihood that people will give it enough time to get better is really the question I want to ask.
I think it's a big question.
Yeah, but you know what I mean, right? Because what's the appetite? That's the word I was looking for. It's like, what's the appetite for people to say that, like, it doesn't work on day one, but on day 5, if you just give it enough time, it's going to be better.
Yeah, and I mean, look, I know that these companies have trillion-dollar valuations.
Yeah.
But we're squeezing the toothpaste in terms of value creation. I think there's literature out there that says that it's going to, erase kind of white collar economies and stuff like that. I think that, you're going to realize when you deploy agents, no matter how thin or thick are the guardrails, that there is a shift in the cost of managing that process. At the end of the day, you're trying to manage the process as efficiently as possible. So if you're like, okay, I'm going to deploy these agents and, I've got 5 people in corporate accounting and I'm going to bring it down to 3. Okay. Bucks, let's say, how much is your agent going to be? Well, is it going to be free? Oh, it's going to start off on the freemium and then it's going to go up in price. And then when it's broken, who's going to fix it? Oh, well, we got to hire someone in IT. Oh, we have this new agent team. Okay. And then what happens when he runs into a snafu or the contract that was supposed to come in the workflow is not coming in because we just acquired a company, in the Philippines or whatever. And it's like, okay, well, I got to find someone who knows accounting. So what I'm trying to say here is I think there will be some level of backlash and when it comes to deploying agents. I suspect that it'll just be like an upskilling part of an accountant or a lawyer or marketing person's job. And in very, very large processes, sometimes in a core business, I don't know, maybe it's medical R&D research or something. Those could deploy multi-million-dollar agentic programs with guardrails and everything. But there's going to be some people coming back saying, I missed those spreadsheets.
So can I give you my perspective on this? Because I
would love it.
Because I've been through this actually. So I sat on a portfolio trading desk. I don't know if you know what that is, but we traded multiple stocks in multiple currencies in multiple markets all at the same time. And there could have been days where we were trading literally tens of thousands of stocks all at the same time. And that only could have been done with machine learning, but also with automated algorithmic trading. And there was a lot of problems at the beginning where people worried that they were going to lose their jobs. But what really ended up happening was we went from trading $200 million a day to $3 billion a day. And we're just way more efficient. And I think that's what you're suggesting here too. If you create all these, and to be fair, those agents didn't have any token costs associated with them. The automated trading that we were doing didn't have any costs associated with them. Sure, there were server costs and there were compute costs. And yeah, we had to have an IT team manage all that stuff too. So same thing. But the idea that this agentic implementation is going to be free or frictionless or seamless, I think is, as you suggest, I think it's well misunderstood. And there has to be an understanding of what that cost is going to be for implementing that and some balance of, who's going to manage that? Who's going to take responsibility for it? And what's it actually going to cost at the end of the day? And where does that cost effectiveness thing actually balance it out with what the humans were doing anyway, if that makes sense?
It's our other $1 trillion question right now.
Yeah.
Which, you know, like we can run some of these LLM queries. It might cost you $2 for an LLM call on a financial statement. It costs us a penny,
Yep.
right? We're both
Yep.
using AI. We're both getting the same accuracy. So once people start seeing the cost shakeout, then you're going to start to understand what are the pockets where the LLMs will have immediate value, and then what are the pockets where it's just going to be too expensive to have an agent running around answering an accounting question. You just need to simplify it with an application. So look, they're still valued at $1 trillion. So these are certainly going to be some type of infrastructure utility type situation. But I would say the valuation that people are attributing to these Anthropics and OpenAI is not necessarily the LLM model, which is a commodity. It's more the fact that they're building these applications like ChatGPT and CoWork. So that's going to be the game.
But doesn't that benefit you as well? Because this was the final question I was going to ask you. One of the things actually that we say on this show all the time is that at some level, in my mind, the cost of creating and maintaining the LLM is still going to be high, right? Because the training costs are just fundamentally really expensive. The compute's expensive, the time's expensive, the research is expensive as well. But the value in the value chain, sorry, is going to fall more to people like Trullion, because that's where the actual work is getting done, and that's where the change in value is going to happen. Sorry, go ahead.
No, this is my whole strategy, and I can tell you that there's a lot of ups and downs. I mean, we're the pioneers in AI.
For
Like
sure.
we didn't pivot into this like other people. We've been at it 7 years. We're now on multiple product lines, and still believe that, you know, that the adage of generalist versus specialist has stood the test of time, right? And so if you create a general purpose utility, in order to bring it to market, you're going to need specialists in certain areas. How special, which specialties, that's a different equation. But we don't make our own, we don't chop our own trees and make our own furniture. We can cook, right? Maybe not as good as a chef. I mean, there's just always equations in the world of a generalist versus specialist. So accounting needs specialists when it comes to AI.
Exactly. And so for me, the value is going to accrete to the specialists. I think it always does at the end of the day. And that the generalists, as you said, I think it's just going to become, I wrote it down, more infrastructure and utility. And as long, I think it was Greenspan who said, the market can be irrational for a lot longer than you can be solvent. And as long as you guys can be solvent, like, I think the value is going to accrete to you guys way more than it's going to accrete to the model people, because that's going to end up being the commodity and you're going to end up being the specialist, if that makes sense. Yeah.
Absolutely. We're excited.
Okay. Sorry. I just wanted to end with that, just so you understood where I was coming from, because I think that's where
I appreciate it.
Okay. I'm going to let you go. It was really awesome to talk to you. Hopefully you enjoyed this as much as I did, Isaac.
Love the vibe, love the energy, and we'll do it again anytime.
Absolutely. Thank you so much for doing this. I really appreciate it, man. Have a great day.
You too.
Okay.
Take care.
Bye for now.
Bye.
Okay, everybody, that is it for AGTP Daily. Again, I want to thank all of our guests today, Andrea Carcano, Isaac Heller, just really, really super high quality guys. Thank you again for doing this. Thank you to our viewers and our listeners who were with us live. Thank you again for joining us. Give us a thumbs up as always on today's video. Subscribe to the YouTube channel and follow us on all of our socials, on X, on Instagram, and on LinkedIn. And as always, ask us questions. We love having the engagement. We will be back again tomorrow at 11 a.m. Eastern time. As always, none of this happens without Martin Ronford. My name is Michael Waits. Bye for now.